You kind of want to be a bear. You kind of want to be the grizzly bear. You kind of want to be at the... Hey guys, what's up? It's your man Pete. And just thought I would update you all on what's going on out here right now in the market at the end of spring 2022. But of course, the bigger story really is the interest rates and the mortgage rates that are climbing at an incredible speed here in the first half of 2022. And it seems to have a real lock on the market as we speak. We're still waiting on the June sales numbers to come out, but I can pretty much expect that it's going to be mediocre at best. And seeing what we're seeing out here, the sellers are definitely feeling some discomfort here in this market right now as the spring market is coming to a close. And as buyers, many of you probably aren't even here right now. You might not even be in the country, as many have already booked flights out of the city, planned travel to go see family overseas, or maybe even starting vacation season early. Let's just say there's not a lot of real estate on the mind and a lot of real estate activity going on right now, as opposed to the craziness that we saw over the last 1.5 to 2 years. But we'll get more into that and what I think about what's going on in the market and sort of how the summer market is going to be looking over the next couple of months. But here's my hint. It won't be pretty. Okay, and we're back. So there was some pretty big news that happened last week, not so much in Canada, but down south in the United States, where the Federal Reserve raised their benchmark rate 75 basis points, which is a pretty ridiculous number, and it's a number that we haven't seen for a very long time. And obviously, of course, a really big raise is absolutely necessary right now to sort of rein in inflation on everyday household items, things that you sort of buy at the grocery store, sort of your big box stores. All of that stuff is getting really, really expensive as inflation is really taking hold, not just here in Canada and the United States, but pretty much all over the world. To sort of tackle the problem of inflation sort of spiraling out of control and just to slow down people's spending and make people a little bit more financially prudent. Not necessarily a bad thing. But then of course what happens with that, and especially in the real estate business, is that it really slows down business and activity, right? And at a time when it should or normally is busy. But for us here in the north, the last raise we got was on June 1st from the Bank of Canada, where they raised it 50 basis points, which was a lot of interest for us here, and it certainly impacted and slowed down the market. And so now, of course, with a 75 basis point increase, and they're actually saying it's not enough, they're still trying to play catch up down in the US, it's pretty much a lock that we're going to be raising it 75 basis points as well here in Canada at the next announcement, possibly even in a couple of weeks. And to me, it's just a little bit funny and interesting about how the inflation really happened. We all know, of course, when interest rates are low, you're going to get more housing activity, right? But not just housing activity, you'll get more business activity in the economy as well too. But now with the overnight rate at 1.5%, it's not really so much the actual interest rates themselves, but it's really more about sort of the future projections of what they're anticipating to happen over the next, I think, 6 to 9 months, which is basically they're going to raise it even higher. But it's just interesting in the housing market how, home prices were going up when interest rates were very low. And then now that they're raising interest rates, housing prices are sort of, definitely not as crazy as they were before. Some areas are still pretty hot, but some areas are pretty ice cold right now. And so people and buyers out there are just basically part of one of two camps, or maybe even both right now. One is that they're sort of waiting for interest rates to keep going up. It's sort of when they're finished and done battling inflation, or where they think they're going to stop the interest rates at. And then you've also got people who are just not even here. They're not even thinking about real estate at all, like physically and mentally. And so it's just completely sort of taken the steam out of the marketplace. Of course, it is challenging to figure out which neighborhoods are still hot and which neighborhoods are really ice cold. Talk to your professional, or definitely give us a shout here for private counseling, service, and advice. But yeah, it's like, some people are really sort of trying to just wait for the dip, wait for the bottom point in the market in terms of when interest rates are the highest. I was just having a conversation with another client of mine, and it's just funny how people would be waiting for the most expensive time to get a mortgage. Doesn't really make a whole lot of sense. Yeah, in the future, like the rates are going to be what they are, but then are you going to be sure that the supply is going to be there? For supply is always the talk of the town on this channel and in Toronto real estate. We can't really talk about what's going to happen necessarily in the future, but we can talk about what's happening right now, where rates are going up. Yes, they're climbing, but at the same time, housing prices have sort of corrected in some areas already, right? So you have this huge amount of supply that you can look at and choose from, compared to how it was when it was really tight and there was like 20, 30 people for every single property. It's quite a reversal, and it's really, really staggering, even for me being in this business for over a decade. There's really never really a best possible time to get into the market. Like there might be, but it's a very small window. And so we don't expect the Toronto market market to be like this forever. I mean, it might last a little bit longer this time just to sort of recover back from the pandemic period, but it's really the supply that we're talking about. So when the supply starts dwindling down, you're going to have less choices to choose from. And at the end of the day, people still continue to live their life, and I say it all the time, real estate is really more of a lifestyle thing than it is about an investment thing. And sometimes people sort of get that mixed up, but especially when you're buying for yourself, yes, it's partially driven by investment and analytics and all that stuff, but it's really primarily driven towards you. What is your lifestyle? How is this home going to work for you? And does it work for you? Still people continue to need more space. There's people that are forming households, they're having kids, they're getting married, getting divorced. There's all types of things that happen regardless of what's going on in the economy, interest rates, and housing. And so there's always going to be people buying and selling and moving, but right now, we're just seeing the people who are doing it because they absolutely have to. But yeah, I mean, if you sort of want to take an investor's approach to it, like not following the herd, you could potentially make a lot of money here, I think. Because as Warren Buffett always says, you want to be greedy when others are fearful, but fearful when others are greedy. And so basically what he's saying is you got to think contrarian, right? So if everyone wants to sell, then maybe now's the time for you to be buying. And, take it from somebody who's seen a few cycles in the city is that demand always returns, so you kind of want to position yourself. You kind of want to be the grizzly bear at the top of the stream catching all the salmon. But yeah, I get it. It takes a lot of courage. It takes a lot of cojones, you know what I mean? To strike out when the proverbial knife is falling. I'll tell you, it's sort of in these moments where if you've got the money, the opportunity is there, and you work with the right people to negotiate a great deal for yourself, hey man, you can easily swing 200,000, maybe 300,000 in a short amount of time when the market recovers. But yeah, right now it just feels like the market is just a real tough slog, especially if you're trying to sell properties. Basically an uphill climb pretty much in most neighborhoods, except for the really, really high demand ones. Yeah, the suburbs are tough right now, and prices are definitely decompressing in the burbs. So if you're in the market and you want to try some negotiations, now is really a good time for that, especially in the suburbs. But of course, the truly brave ones and the courageous ones are thinking a little bit against the grain. If you want to learn how to become an investor, maybe learn how to become a property flipper, or just hold property for a few years and then move on and then do another one and another one and another one, then you should definitely give us a call here at Selling Toronto. We're happy to work with you as our clients so that we can make sure that every move you make, you've got a chance to make some serious money here in Toronto real estate. But lifestyle first, especially when you're talking about your own house for your family. So don't be shy, reach out. We don't bite here at Selling Toronto, but we might help you take a bite out of the price on the next property that you purchase. So thanks again for watching. Don't be a stranger, everyone. Give us a like, hit subscribe. Contact us if you're thinking of making a move, whether you're buying, selling, or even leasing. Contact is in the description box below, and it's also at the end of the video. And hopefully 2022 doesn't turn out to be as bad as it's looking right now. Talk soon, everybody, and bye for now.